Welcome to the Creating Wealth Simplified podcast. My name is Lauren Wells, here with my co-host, Chris Seveny. We're committed to providing you with the knowledge required to build wealth through real estate investing. Tired of consuming content about real estate? Stuck in analysis paralysis? Ready to do your first deal? As a member of our community, you will learn how to go from consuming content to taking that first step into the world of real estate investing. Our show is not about getting rich quick, but about providing you with the knowledge you need to take action. Join us as we speak with experienced investors who share action tips on how to escape the corporate world, start a thriving side hustle in the world of real estate, and go beyond your W-2 or 401k.
Welcome back, everybody, to another episode of the Creating Wealth Simplified podcast. I am your co-host, Chris Seveny. Today, I got a special guest. I have Brad Shepard from Sugarhouse Investments. Brad has over 20 years in commercial real estate. Brad is also a broker-dealer, so we'll talk a little bit about that aspect of real estate. And Brad is currently in Boise, Idaho, via Austin, Texas. So he went from hot to cold, which is probably the opposite of what everyone else does. Hey, Brad, thanks for joining us today.
Thanks a lot, Chris. I appreciate it.
So usually what I like to start with, Brad, is having people start with kind of what they've going on today. And then usually I'll rewind it back after that to figure out how you got into real estate, which you got a 20-year career that we can talk about, and what you do today and how you got to that. So why don't you let listeners know a little bit more about Sugarhouse?
Perfect. I appreciate that. So Sugarhouse functions as a licensed private securities broker-dealer rep. And so what that means, private security being a fancy way of saying we raise money for commercial real estate projects, generally via syndications. So most people hear broker-dealer, they're thinking about the property broker-dealers. I'm on the securities side. So I have a few securities licenses. I function more like the old school. You call up your stockbroker and you want to buy 100 shares of Microsoft or whatnot. Nobody does that anymore, but it's that sense. But instead of a public security, we're dealing in private securities, which a syndication is exactly that. And so I've been running Sugarhouse for coming up on 7 years now. I consider myself a recovered landlord. I've done plenty of flips. I've done development. At this point, I just have 2 of my own personal rentals, but I've sold off most of them to focus on the commercial real estate projects. It's been a good fit for where I'm at now with mid-40s. I've got a couple of young kids. Being on the capital raising side, working with experienced operators who are generating solid returns, if just as good, if not better than what I get from my own personal rentals. It's been a fantastic fit. And so that's been my mission, is to take this opportunity, light bulb moment, the concept of investing passively in commercial real estate deals to other busy individuals who like the idea of owning real estate without having to deal with it. That's been a fun endeavor for the last 6-7 years.
That is awesome that you do that. 2 things that kind of, I'll say, get stuck in my head when you mention that. I want to kind of go down probably the rabbit hole is the experience of the operators and raising money, because as you know, on Facebook, you can see a million different ads of things, and a lot of quote unquote gurus make it sound like raising money for these syndication deals is very simple. And you don't need to do due diligence on the sponsors and many different avenues of that. So let's first talk about sponsor experience and the importance of that.
Yeah. Up until about a year and a half ago, everybody was a genius, right? You couldn't lose in real estate. Everything just went up. The financing was cheap. The values were ever increasing until they weren't, right? Financing became expensive. The values stopped increasing and the tide went out, and we realized really, really quickly who had the experience to weather this type of storm and who didn't. That's really the crux of the service that we try to provide to our potential investors, is knowing who are the experienced operators, the ones that can deliver on their promises day in and day out. Nobody ever has issues, right? Bumps come along, even for experienced operators, but that experience lends them to, they've seen these kind of things before, or they've ever seen something similar before, and they know how to manage it. When we're evaluating a deal, we partner with just a handful of operators, right? We have plenty of folks that come to us asking for help raising capital. And to date, we've said no. It's been more of different types of connection points. But because we have such a deep vetting process with our operators, It has to go through my compliance department, my broker dealer's checklist. But yeah, now that the financing became so dicey, we've added a few more components to our checklist as well. Who on that team, on that operator team, has the financial acumen that really understands the banking relationship, the financing details, the gotchas within the loan documents and covenants. So 2 years ago, they really that critical. We thought, right? We all thought, but it's been key to weathering these cap rate expirations and DSCR requirements, debt service coverage ratio requirements. And we've seen some operators get in trouble with didn't really understand those covenants. And so, yeah, at the end of the day, our due diligence checklist, and this is what we explain to our potential investors, it starts with the operator. Then we look at the market, then we look at the deal, but this starts with the operator. And we need to see an operator team that has the experience across the team to be able to handle the ups and downs that come along with these types of projects.
How many pages is your due diligence checklist?
I think we're post, the lending environment. Yeah. Just item by item, I think we've got 5 or 6 pages at this point of the checklist that we're going through, the background checks that we do. What about this? What about that? It's pretty extensive.
Yeah. So the reason I asked that question is for people listening, we have our distressed mortgage note fund, and we also have work with broker dealers and other firms that I thought people did due diligence until I started getting due diligence questionnaires from broker dealers. And all of a sudden it was like, wow, you get like you said, 5, 6, 10-page checklist that basically is really intense. But what's great about it for people who listen, who look to raise money, it makes you think about things you may not have thought of in the past, because it is extremely extensive. They can go into succession planning, key person insurance policies. Do we have those in place? It is extremely extensive. And for anyone who's an operator, I recommend at least talking to people and just say, hey, can I see your checklist, and understand it to see if I would even qualify, because it gets you thinking about a lot of things about raising money or questions that people may ask you that you might not be prepared to answer that now you would be prepared.
Right. And the honest truth, the average partner, investor, limit LP isn't going to be asking those questions, but that's my job, is to do that for them. But yeah, every once in a while, the operator is going to run into an LP, a sophisticated LP who's going to have these questions, and behooves the operator to have answers ready for really detailed examinations from the investors or the capital raisers that they work with.
Yeah. Yeah. We had to also go through a fact right report, if you're familiar with that company. So that is pretty extensive. So,
and probe is the right word.
Yes, probe is. So being a securities broker, you probably also see, when you mention people ask you to raise money for them. And again, my understanding, you basically are working with investors who you're looking out for their best interest or reviewing these investments. But what are some of the red flags that you may see or you've seen in the past that said, yeah, this isn't the type of deal for our investors?
Yeah. Right now, we focus on just a handful of different asset classes. Most of our deals are in the multifamily apartment complex space. It's an asset class that's super familiar to all of us. We've all lived in an apartment at some point. Mm-hmm. Self-storage, industrial, and mobile home parks. We have opportunities that have come to us with ATM funds and other type, Bitcoin mining funds and things along those lines, right? Where they're just, the potential returns are, pretty attractive. But it just gets outside of an area for us where we feel like we want to project confidence and to do the diligence that we want to be able to do for our investors. The minute we see, this isn't a red flag by itself. Maybe it's a yellow flag when you see combined experience, 50 years of combined experience. All right. What is that combination of? Is it's one guy in there's got 20 and the others are, brand new, or one guy's got 40 and the other guy's only got 2. What's that combination of, right? We understand the value of a team. And so the bulk of the folks they haven't gone through any cycles or any exits yet. That's going to be something we're going to be a little bit nervous about. We really want to see a breadth of experience from multiple members of the team and various specialties. Also, the idea of we work with an operator for a specific asset class and a specific geography. And then if also they start talking about different asset classes and that operator in different geographies, we're wondering why, what's going on. That's a cautionary tale for us. Like, what's the change in focus about right now? We want you focused on what we've aligned ourselves with for here. There was one other thing that popped in my brain and popped right back out. But those are a few of the items that come to mind. Maybe none of them being total showstoppers right out of the gate, but they're going to force us to dig deeper.
We hope you're enjoying this episode of Creating Wealth Simplified. We wanted to take a moment and tell you more about our passive income fund at 7E, which is open to both accredited and non-accredited investors. Our latest offering targets an 8% annual return distributed monthly, with the ability to potentially achieve a greater return through our bonus share program. If you'd like more information, reach out to us at invest@70investments.com to learn more. Thank you.
Yeah, and when you start adding them up, it's part of that checklist. And it's interesting because I've seen, for example, for us, we are in the private credit space, and people ask us that question a lot. Like, were you in this business back in 2008? And I joke to people, I say, no, but if I was, I wouldn't be in it today, because everyone who was involved in private credit in 2008 is retired, sitting on a beach somewhere right now because they're buying all this debt at 5 cents on the dollar and made millions. Yeah, that's the other thing I've seen, especially over the last 24 months, is operators who go from one asset class to the other, or basically just start popping up I've seen one, and again, this is just my opinion, they're chasing that shiny object of, okay, they're doing multifamily, which, like you said, anybody could have made multifamily during a period of time. Next thing, they're doing oil and gas. It's like, okay, that's two completely, like if you're doing multifamily, okay, you could switch maybe like office or retail. It's different, but it's still oil and gas completely. I mean, that's an operating business a lot of times, and again, or private credit, or switching to short-term rentals. When I start seeing that as an investor myself as well, that starts to raise flags when I see that, because do they have that experience, or are they just chasing that shiny object?
Right.
One of the things that kind of along with that is you doing that due diligence. What are some of the benefits that people have investing in syndications when they go through a broker-dealer rep? Yeah,
so a frequent question I get is from a potential investor is, could I go directly to that operator and invest? And the answer is, of course, absolutely. Working through the broker-dealer rep like me, it doesn't change their outcome at all. It doesn't impact their returns. My compensation comes from the general partner's acquisition fee, which is paid regardless of where the investor funds come from. What I'm trying, my value add to the potential investor is this idea of, we know the market. We know who the operators have done well. We're not privy to every inside detail by any means, but we generally get wind of which operators are struggling, who we might be seeing on properties, might be seeing in a distressed situation in the near future. So we're able to steer our potential investors to these operators that we know have the experience and the deep pockets to weather these storms and these bumps that come along the way. We also provide a single source for multiple operators and asset classes, with one investor portal where you can manage keep track of all of your investments that you do through us. And so I remember the very first time I invested in the syndication, 2016, I found an operator that was willing to take my money. And I thought, wow, I did great. They're willing to work with me. I found lucky me, I found somebody that was willing to let me write them a check. I was thinking that was the hard part, right? Now I realize, okay, there's 1,000 operators out there. How do you identify the good ones? That's the hard part, not finding somebody willing to take your money. And so we've tried to deliver that a kind of a concierge level hand-holding experience. Here are the ones that are not just having opportunities available, but ones that are worthwhile exploring, and provide that level of responsiveness. We bring a significant amount of dollars to the operators. And so when I call them, I get a quick response, right? We hang out. We do regular check-ins. We spent time driving all their projects together. We understand their processes in and out. We have spent time with them individually as people to get to know them. It's just a level of upfront work that the average LP is just not going to be able to do. And we do that with all of our partners. And so it's basically a hand-holding concierge experience to identify multiple operators in either similar or multiple asset classes, align the geographies, have a single portal where the investors can access and view their results, and really keep this as hands-off of an experience like it was designed to be for the passive investors.
So one thing that pops in my head when you're discussing all of that is, I'll give an analogy that might be accurate, again, within a different asset class. Using a broker deal like yourself, especially if you're an investor who does not have the time to do a lot of research or due diligence, it's no different while most people hire somebody to review a stock for them or something else, which, again, I'm not comparing stocks in real estate, but they're very different asset classes, but it's very similar where you don't have the expertise to understand it. Brad does. So I guess question that I would ask you is, the sponsor pays, the GP pays you basically for the money raised. Not if I went to invest in a fund that you have an affiliation with, I'm not paying you. The broker dealer, I'm sorry, the GP is paying you. Right. Why don't more people use a broker dealer?
I think it's just simply awareness, right? People are out there, they hear a GP on a podcast or on a website, and I'm not a big SEO guy. I'm not, I don't have a, massive online presence. I try. Always happy to have those conversations, but I think it's really just awareness at this point. This is a relatively young market. The idea of investing in commercial, most people I still talk to, I tell them, hey, did you know that apartment complex that you drive by on your way to and from work? It's just normal people like us that own those. And that's a surprise to most people. They didn't realize that they could potentially invest in those types of opportunities. And then once people do learn of those, it's, well, who is it? How do I get access to those? I think it's just an awareness thing. With our model, the licensed securities representative model, I'm not a financial planner, but my fiduciary responsibility is to the investor, right? Mm-hmm. I sit on the same side of the table as the investor, not the GP. So I have to understand the investor's background, their risk tolerance, their time horizon, their strategy. How many kids do they have? When do they need this money? What's their experience? Can they withstand the loss of this investment? Do they have the sophistication necessary? Before I can then show them, not tell them like, this is the one for you. All right, here's the deal for you. But tell them, explain, all right, here's a multifamily opportunity in Dallas, and here's the pros and cons, X, Y, Z of the deal. And here's a self-storage fund with these type of parameters, pros and cons to that. Which one suits you best? And explain that to them for them to make the final decision. But it's an education, hand-holding opportunity, but sitting on shoulder to shoulder with them on their side of the table. I think more people would be better served working with a licensed securities representative as opposed to going straight to the GP who has their deal and just their deal to tell them about and to raise money for.
Now, great points. And, people, this whole syndication aspect really didn't start getting formed, from what I understand, is really from the Jobs Act, where, the 506C and some of these fund offerings that really got vetted through, which is, I think, about 10 years old now. And a lot of people don't understand, like you mentioned, they don't know. They're like, oh, I'm just going to go invest in a REIT, and don't even know what a REIT is. And they're just like, oh, I'm just going to go buy public stock and stuff. And it's like, you can invest in that building, which is owned by a REIT. Like you said, the building right next door to it is owned by John down the street as the general partner, who actually lives and breathes and is part of the community in this area. And it's a very different offering and asset class. Well, not asset class, but different offering, different types of returns potentially. There's pros and cons, public versus private, that, we could talk days on. Like you said, I think it's all about the education and being able to understand that this alternative asset class now of all different aspects of real estate opens up the door for people. And there are people like you out there who've done a lot of due diligence. And like you said, your fiduciary responsibilities with that investor. And there's a lot more involvement from your aspect that makes life a lot easier for investor. So. Right.
And I completely agree. And it's really fun. It's a really young industry. The idea, 20 years ago, our parents, they would call up their stockbroker to order, whatever, 20 shares of IBM or 200 shares or whatever. Now we just all go on to the broker's website, Schwab or Fidelity or whoever to E-Trade, whoever you're using. It's really easy to do. We like that idea of that kind of ease with owning real estate. You can do that through a REIT. There's pros and cons to that. The liquidity being the biggest pro, the con being you're not directly a direct owner of that asset or participate in the tax benefits that could come from that. But so when you want to go be a direct owner, it's people think of, well, I've got to go be a landlord. I've got to go be a flipper. Oh, I found out about syndications. Oh, that syndicator right there will take my money. Lucky me. Well, okay, there's another level of due diligence that could happen even within private securities. And of course, private versus public. Private is quite a bit harder to do your diligence on because you don't see their financials when you're going out there. Like you can easily see the financials for a public stock, a publicly listed company. So how do you really get comfortable? If you're busy as a doctor, as a lawyer, as a busy W-2 employee, a business owner, you're not going to have the level of experience to do that due diligence on a private security like a syndication. And I think that's where, the broker dealer representative still serves a really critical function.
So one of the questions that I always ask is, there's the broker dealer and then there's kind of like investment advisors. What's kind of Are they the same? They different kind of? Now, how does that play into account? Because there's a lot of terminology also that's out there.
Right. So investment advisor, certified financial planner, generally you're talking about, you might pay a fee for helping them come up with a plan, a strategic plan for you, or you might be paying them a fee of assets under management, which was really common. So if you place $1 million with them, they're going to go place it in the appropriate portfolio for you. And each year they take their fee for managing your funds, whatever that percentage is. A broker is basically essentially paid by commission for transactions. That's how, stockbrokers are paid, right? They get paid by activity. For me, that's how I get paid as a securities. I'm just on the private side, but a private securities broker dealer representative. My commission is essentially, I get paid a percentage of dollars raised from the GP. And so you pick and choose, right? As an investor, do you want to pay that upfront fee to that investment advisor? Most of those folks, they're really still only going to be dealing with public securities. I've yet to run into an investment advisor or financial planner that plays in the private securities space. I'm sure they're out there. I just haven't met them yet, but it's just a different approach. The approach that we're doing as a broker dealer is basically there's no cost up front to the investor. And it's just simply a compensation from the GP side of that agreed upon percentage of those dollars that we bring into their opportunity, their project.
I'll make this statement because I know you probably shouldn't, but I believe most of my involvement with investment advisors they work for a large firm and they push a lot of their own product. And
right.
From what I've seen, where again, with you as a broker dealer, here's what we have to offer essentially is, hey, I've got these 5 sponsors, these 5 or 6 deals right now. Somebody comes to you with, $250,000, you can work with them and kind of figure out which one might be best for them.
That's the idea. And yes, I'm limited to just the operators that I've partnered with, that my broker dealer and my compliance team has approved for me to work with. And so if there's a new operator that's doing something amazing and I don't have a relationship with them, we don't have a contract between my broker dealer and our compliance team, I can't help. I can't place money with them. So that I'm limited to that. So in that sense, what I'm going to be speaking to are the deals that I have currently with my operators that I have a relationship with. But it is that type of a conversation. Somebody comes to us with $250,000. What are they looking to do? Are they looking to grow that, preserve that pure cash flow play, or they want to be a little bit more aggressive about it? When do they need that? And then I can show them which of these opportunities might make sense for them in that scenario. And I have to be able to justify to my broker dealer, to my compliance department, to FINRA and the SEC, if they ever come asking, why did I think that investment was suitable for John Doe who came in with that $250,000? What was it that led me to placing the money there? And I have to be able to back that up, proving that why that could be deemed by a third party as justifiable and suitable. And so, we had to cross a lot of T's and dot a lot of I's. That's the pain of being a licensed broker dealer rep, because you have all these checks and balances and people looking over our shoulders all the time. But for the investor, I think it serves the investor really well.
So if somebody listening says, wow, this sounds intriguing, where I could actually, have, instead of doing all this due diligence on all these different asset classes, syndications, I find a broker dealer that could do this. If somebody's looking for a broker dealer, what should they be looking for and what types of questions should they ask that broker dealer?
Yeah, you can always find any broker dealer, whether they're public and private, at FINRA's website. FINRA is the managing body of broker dealers, administrative arm of the SEC. Brokercheck.org is the place you can go to search brokers. You learn about me. You can go on there and put my name in there and see, where am I licensed? What are my licenses? Do I have any black marks against me? I don't, but that's where you can go do a little bit of research there. And so you can go into brokercheck.org, type in the types of securities you're looking for to find somebody that might be located near you, or just do some first steps. So that's a great resource. I would say we're pretty rare breed at this point still, the number of broker dealers in the private securities space working in the real estate syndication arena. I know of about 20 of us that I'm in regular contact with. Obviously, there's more than that I'm not familiar with. For me to go dig into this and look for more, brokercheck.org would be my first stop.
Okay, great. People want to get more information about your company or reach out to you, Brad. What's the best way for them to reach you?
Yeah, our best place to connect with me and learn about our opportunities is on our website. It's sugarhouseinvestments.com. Sugarhouse. Both my wife and I are from Utah, Salt Lake City area, and that's our favorite neighborhood in Salt Lake. It's called Sugarhouse. And that's where that name came from. So sugarhouseinvestments.com. And that's where you can learn a little bit more about us, our firm, sign up for our email updates when we launch new deals, and schedule a call with me where we can get to know each other a little bit. It's something I have to do to understand where that person's coming from. So it's a great opportunity to get to know each other and see if there's potential alignment there.
Brad, thanks for coming on this episode of Creating Wealth Simplified. That information for everyone will, of course, be in the show notes. And again, want to thank you for listening to this episode. And as always, please leave us a review on your favorite listening station. Brad, pleasure having you on today.
Thank you very much, Chris. Pleasure is all mine. Thank you.
Thank you all. Thank you for joining Lauren and I on this episode of the Creating Wealth Simplified podcast. Each week, we bring you expert education, experience, and information in a digestible format to help you identify investment opportunities so you can build wealth through real estate and take action toward your financial goals. Enjoy the show, share with a friend, or subscribe to the show and leave us a review.